So this is what everybody in the market is trying to figure out right now. And it's sort of surprising that we are here, because if you think about one of the big consequences of the crisis has been this era of unprecedented forward guidance. Now we have Fed press conferences. It was supposed to be this new Fed that was just totally telegraphing to the markets what it intended to do. How did we get here now that Wall Street is so divided on what they think?
The funny thing is, a lot of people are saying that they're almost telegraphing too much. You know, you have one Fed official out one night saying that, we think that low interest rates should stay for the rest of this year. And you have another Fed official the next morning, fewer than 12 hours later, saying, we need to raise rates immediately. So I think that people are getting so many different signals that they're not quite sure what to make of it.
What are the biggest topics of debate?
So one of them is whether the Fed is going to be looking at the U.S. economy, which is looking pretty good, or whether they're going to be looking at international stuff like China, emerging markets, other areas where there are weakness.
And Mohamed El-Erian, of course, chief economist at Allianz, also a Bloomberg View contributor, had an interesting piece out this morning on Bloomberg saying how, in his estimation, it's sort of a 60-40 risk, whereas if you look at what's going on in the domestic U.S. economy, yes, the U.S. economy is strong enough to raise rates, strong enough to sustain that, and I guess there he would agree with Jeff Lacker, the Richmond Fed president, who thinks that we need to align rates to the U.S. economy growing between 2% and 3%. But then the other side of that is the global economy strong enough for the Fed to raise rates into, and there it very much seems like the answer could be no.
Yeah, and it's funny because you saw actually Larry Summers come out a while ago and say that raising rates could be a really big problem for the global economy. And if you keep in mind, he was one of the people who had really been pretty active during the Asian financial crisis in the late 90s, so that's been a big focus for him. So it really depends on where you're looking.
And we're showing a picture also of Ray Dalio of Bridgewater Associates, one of the biggest hedge funds in the world, and he's been out there warning that actually if the Fed does move to raise rates, it's going to be a big policy mistake. We could overturn the apple cart, as he says, and the Fed's going to have to reverse track, just as we saw the Central Bank of New Zealand do, and actually lower rates if they do in fact raise them in September.
Right, and I think the question is, which is going to be top of, the Fed's mind next week?
Yep.
Because at the same time, you think about it, and Janet Yellen is a labor economist, right? She might not be paying as much attention to the inflation aspect, but if you have this global long-term downturn, like Ray Dalio and Larry Summers say, then it could really, force eventual easing. Potentially.
Yeah. Of course, we have this function on the Bloomberg terminal, the Fed funds futures rate. It's WIRP Go, WIRP Go on your terminal, and we'll just pull it up. And this shows what futures traders are betting the likelihood of a rate rise is. So this is interesting. Futures traders are bet that it's less likely that the Fed, in fact, will raise rates than analysts on Wall Street do. So I guess my question for you, Alexandra, is what does all this uncertainty mean for the markets?
More volatility, probably, over even the next week. We had a good story out today talking about how the next 5 days of trading could help determine, what the Fed does.
Yeah.